Welcome to Daily Crypto, episode 38. We're embarking on a deep dive today into the very latest movements and, well, the significant developments shaping the crypto landscape. It's a fast-paced world, incredibly dynamic, and our mission, as always, is to cut through all the noise, really get straight to what truly matters for you. Today, we're asking a big question. Is the crypto market truly maturing? Is it becoming a foundational asset class? Or are we just seeing a more sophisticated, maybe even chaotic form of speculation? We'll be exploring both sides, definitely, from corporate treasuries all the way to the wild world of meme coin madness.
Exactly. Our aim today is to provide you with a clear, concise, but also insightful overview, really focusing on the most impactful events. We'll be covering key price action, delving into some fascinating institutional moves. We'll also dissect the ever-evolving regulatory shifts. And yes, we'll certainly touch on those more dynamic and sometimes quirky trends, things we're seeing in areas like NFTs and meme coins. It's a comprehensive look, really, a look at a market that's constantly redefining itself.
Okay, with that broader picture in mind, let's zoom in. Let's look at the immediate market pulse. What are the charts telling us right now about Bitcoin, Ethereum, and maybe some of the standout movers? Bitcoin is holding incredibly strong, hovering at what, $107,721, showing a slight uptick, about 0.315%. What's truly remarkable is its ability to maintain its position above $107,000, even amidst, all the global market volatility we've been seeing.
Yeah, it really is.
And Ethereum, not far behind, currently at $2,475.52. That's showing a gain of 1.516%, holding quite steady right alongside Bitcoin.
It's a crucial sign of resilience, isn't it? Both Bitcoin and Ethereum are demonstrating a kind of stability that, well, some traditional assets can only dream of right now. Their ability to hold ground, even outperform during these periods of wider market uncertainty. It suggests a growing confidence from, a significant segment of investors, people who see them as more than just speculative assets, more substantial.
Absolutely. But then you look beyond the top two, and the story gets really interesting, doesn't it?
Hmm.
Well, BNB is sitting there at $654.79%, up about 0.714%, and Solana at $150.52, showing a gain of 0.438%. XRP has seen a minor dip, down just under 0.29% at $2.18. A bit of mixed movement there.
Okay.
Then you turn to the meme coins, and it's a completely different universe. While the majors are kind of steady, we're seeing explosive moves. Look at assets like Pepe, $0.00000000099, up over 4%. Bonk, 0.000000148, up more than 2%. And Dogwoof Hat, wow, 287273. Experiencing a notable surge, up over 7%. Oh, and PopCap too, $0.310049, up over 3%. It's a stark contrast to the stability we just talked about with BTC and ETH.
This divergence, it's fascinating, between the stable major and these surging meme coins. It isn't just about shifting risk appetite, though that's part of it. It really reveals a fascinating kind of dual market strategy playing out. On one hand, you have institutions, larger investors, seeking defensive long-term assets like Bitcoin,
Right.
maybe as a hedge against inflation or traditional economic instability.
Right, the store value argument.
Precisely. But on the other hand, a significant segment of retail investors,
Yeah.
maybe feeling locked out of traditional gains or maybe just seeking those huge returns, they're chasing these highly asymmetric, high volatility plays in the meme coin space. And this is a critical tension defining today's crypto landscape. It shows both maturation and persistent speculative fervor. They're existing side by side.
That makes a lot of sense. It's like two different worlds coexisting. And speaking of institutions, here's where that maturity argument really starts to gain traction. We're seeing some truly big traditional players not just considering crypto, but putting Bitcoin directly onto their balance sheets. Take the Naughty Coffee, for example.
Yeah.
Their stock surged, get this, a whopping 242% in just 1 month.
Incredible.
Yeah. After shareholders approved a plan to establish a staggering $1.1 billion Bitcoin treasury, I mean, that's not just an investment. It feels like a major strategic corporate pivot.
It's an astounding level of conviction, isn't it? And Japan's Metaplanet offers another prime example. Really reinforces the point. They've not only added 1,005 Bitcoin to their holdings, but they also issued $207 million in 0% ordinary bonds specifically to acquire more Bitcoin.
0% bonds just to buy Bitcoin.
Wow, exactly. And when you hear expert views suggesting Metaplanet is set to win in the long term, especially after their stock already ran up an incredible 7,500%, it just underscores this seismic shift. These aren't quick speculative plays for these companies. These are serious treasury management decisions. They're treating Bitcoin as a core asset.
And it's not just corporations, right? You mentioned states earlier. We're even seeing states like Texas, beginning to embrace Bitcoin reserves.
Yeah.
What does this all signal, about Bitcoin's role in the broader financial ecosystem?
Well, if we connect this to the bigger picture, these actions by companies and, yes, even states, they underscore a growing fundamental belief in Bitcoin as a long-term treasury asset. It's becoming recognized not just as a hedge against inflation, which we hear a lot about, but also against, fiat currency depreciation and traditional economic pressures. This isn't just a clever phrase, it's a fundamental shift happening in corporate finance.
So like a strategic imperative almost.
You could say that. And the concept of Bitcoin as the hurdle rate is particularly insightful here. It basically means that when evaluating new investment opportunities, companies are increasingly comparing potential returns against Bitcoin's historical growth. If a new venture can't consistently outperform Bitcoin, well, why bother? It sets a really high bar for capital allocation. It effectively makes Bitcoin the new benchmark for long-term value creation. It's less about simply holding BTC and more about a whole new strategic lens for capital efficiency.
That's a truly profound shift in thinking. Okay, so this institutional embrace inevitably invites a closer look from regulators, right? And the technology itself is constantly evolving. How are governments and networks responding to this burgeoning ecosystem? We're seeing some very distinct moves globally. South Korea, for instance, they're making a significant policy shift, halting their central bank digital currency, their CBDC project, and instead they're prioritizing the rollout of one-backed stablecoins. That seems quite pragmatic.
It is very pragmatic. South Korea's move towards stablecoins shows, well, an approach to digital currency that prioritizes stability. Stability within their existing financial framework, rather than jumping into a full-blown, centrally controlled digital currency immediately. It's a nuanced regulatory play, perhaps favoring a more controlled integration over a, disruptive overhaul. It highlights that different nations are finding different paths, different ways to embrace digital assets.
Interesting. And on the other side of the coin, we also had the news about the Nobitex exchange. They're beginning to restore service after a pretty significant $90 million exploit. That's a stark reminder, isn't it, of the security challenges that still persist in the space despite all the innovation?
Absolutely. A very sobering reminder.
And speaking of exchanges, CZ confirmed that Binance kept XRP listed through that entire long SEC saga. That highlights a certain resilience, maybe confidence, in the face of intense regulatory pressure, wouldn't you say?
Oh, absolutely. That decision by Binance, it spoke volumes about their long-term view on the asset. Despite the legal cloud, it was definitely a risky move at the time, but clearly they felt it paid off. Meanwhile, you have the IRS also making waves. Crypto letters, they spiked over 750%.
750%.
Yeah, it indicates a looming enforcement wave for digital asset holders. You can feel it coming. And this raises that important question, doesn't it? About the delicate balance between fostering innovation and asserting regulatory oversight. The IRS has increased activity, the ongoing saga with XRP. It all underscores this constant interplay between centralized entities trying to assert control and the inherently decentralized nature of much of this tech. It's a constant dance between structure and freedom, and we're seeing new steps in that dance every day.
A constant dance. I like that analogy. And from a technical perspective, something else happened. The Maxwell hard fork recently went live on the BNB chain mainnet. Now, for those unfamiliar, a hard fork like Maxwell on the BNB chain, it's a major upgrade. It's non-backwards compatible, upgrades the network's rules. Think of it less as splitting the chain maybe, and more as everyone agreeing to upgrade. Upgrading to a completely new, improved version of the software all at once, pushing the whole ecosystem forward. It's a pretty big step for that network.
Precisely. And it demonstrates the continuous development, the evolution happening at the foundational layer of these networks. They're constantly pushing boundaries, improving capabilities. These are the kinds of upgrades that enable the next generation of applications. Really crucial work.
Right. Okay. So beyond the big headlines of Bitcoin and Ethereum, the crypto landscape is it's brimming with innovation. And sometimes chaos, let's be honest, in its more dynamic corners. It's not just about the big players. There's so much happening in the wider crypto ecosystem, especially in areas like NFTs, DeFi, and yes, meme coins again.
Always meme coins?
Always meme coins. We're seeing a notable resurgence in the NFT market. Sales reached $125 million. And interestingly, Ethereum actually dethroned Polygon in terms of volume, and specifically, Pudgy Penguin's NFT sales are soaring, which in turn has boosted the price of their associated PikaView token. That PayingU token is essentially a governance or utility token linked to the collection's ecosystem. That's a fascinating connection, isn't it?
It is, yeah. It really shows how value can accrue in these highly networked, highly engaged communities. And in the DeFi space, decentralized finance and DX, decentralized exchanges, we saw Hyperliquid regain $40 amid rising decentralized exchange volume. That shows activity is definitely picking up there. It highlights the ongoing growth in these decentralized financial systems, systems that aim to replicate traditional services but without intermediaries.
Yeah, the promise of DeFi continues. But there's also been quite a debate around GameFi. Blockchain-based games with integrated economic models. Alessio Vanassa has been rethinking incentives in these play-and-earn economies and raising the critical question, is GameFi essentially a Ponzi scheme? That's a serious charge for a sector with so much hype.
That's a crucial discussion happening right now. What's striking here is the continuous innovation and, like you said, sometimes chaotic creativity in these subsectors. The debate around GameFi, for instance, highlights the crucial need for careful consideration. Careful thought about incentive models in these nascent industries. You can't just slap a token on something and expect it to be sustainable long term. It really forces a critical look at how value is created, how it's sustained, and frankly, who ultimately benefits. From my perspective, watching the GameFi debate unfold, it reminds me a lot of the early days of, say, free-to-play mobile games. They were trying to find sustainable economic models too. The challenges are similar, just amplified by the blockchain layer.
That's a great comparison. And then we have innovative applications like EstateX, their tokenized twist on real estate investing, truly merging traditional assets with blockchain tech, potentially making real estate more accessible. And of course, the meme coin phenomenon. It just continues to lead the crypto pack sometimes, doesn't it? With these meme cats and underdogs like Dog with That, Pepe, and Bonk constantly making headlines, it feels like every week there's a new meme coin taking off. Sometimes I wonder if we'll eventually see Fido coin based on someone's golden retriever.
Chuckles slightly. Could happen.
Right. There's even a tool called Moonshot now that apparently lets you create your own meme coins using Apple Pay. Just wild.
The contrast here is quite stark, isn't it? On one hand, you have high-value institutional adoption of Bitcoin as a treasury asset, driven by long-term financial strategy, a deep understanding of its properties, very calculated. On the other hand, you have these highly speculative, community-driven meme coin markets, where value is often derived more from cultural virality and collective belief than from traditional utility. Both exist simultaneously in this incredibly dynamic space, feeding off different aspects of human behavior and financial motivation. In this explosion of meme coins, it certainly challenges that narrative of crypto's maturity, doesn't it? It suggests the market is still very much in an experimental, almost adolescent phase across its various niches.
It certainly does. Adolescent phase. I like that. So to recap then, wow, we covered a lot. We've navigated the steady climb of Bitcoin, showcasing its resilience and growing institutional appeal. Even if it's not without its own set of risks, clearly. We've tracked the evolving regulatory landscape. Countries taking different approaches, authorities like the IRS stepping up enforcement. That's a massive wake-up call, frankly. It signals the era of Wild West crypto is definitively over for many. And then there's the wild, often unpredictable world of altcoins, NFTs, and meme coins, constantly pushing boundaries of what's possible and what's hyped. Well, sometimes just plain fun or bizarre. This exploration today truly highlights the dynamic and, often unpredictable nature of the crypto market.
Yeah, I think our discussion today really underlined that the crypto space isn't just about looking at price charts. Not by a long shot. It's this constant interplay of technology, finance, policy, and crucially, human behavior. The rapid pace of change. I mean, from Bitcoin treasuries and state-level adoption to these nuanced regulatory shifts. And the unceasing rise of new meme coins, it constantly challenges our understanding of value, our understanding of digital ownership. It's a truly unique intersection of so many different forces constantly reshaping itself right before our eyes.
Absolutely. So as you, our listener, consider all of this information we've unpacked today, think about what aspect really stood out to you, perhaps the implications of widespread institutional adoption, the future of decentralized finance, or even just the cultural impact and maybe the long-term sustainability of meme coins. What stands out to you as the most impactful trend we talked about today? And maybe more importantly, what might it mean for where we're all headed next in this space? Something to chew on.